Hi, Shae Russell here from Rock Solid Investing, and believe it or not, this is take 2 of this video because it turns out I did not hit record the first time. So let's see if we can rush through today. All right, so I am coming to you from the gorgeous Grand Hyatt in Melbourne. I am a guest here of the New World of Metals investment series, and as you can imagine with a title like that, we have been talking about all things metals and the much needed metals for the coming energy transition, or underway energy transition really, because it's all happening. So basically on the back of today, I have got 3 key takeaways for you. First and foremost, and that is that can you imagine how much greater the first one was? That geopolitics is actually now the domain of commodity analysts and not just energy analysts. So years and years ago, it was only energy analysts that needed to worry if relationships with Saudi Arabia or Russia were a little bit tenuous. But now commodity analysts need to worry about geopolitics because a lot of the metals that we need come from locations that aren't always our best of friends. So this is why a lot of commodity analysts now are factoring increasingly tenuous relationships with some of our trading partners. Now, the second key takeaway I have for you today is that lithium is still absolutely hot. Now, for some of you who read my work in other places of the internet, you might find out that I'm not a huge fan of lithium right now. My problem with lithium isn't that it's great and that it doesn't have potential. My problem with lithium is that I think it's still caught up in the hype cycle, or very much at the peak of a hype cycle. I think some of the biggest gains have been made in lithium. Now, this isn't to say that there aren't potential opportunities further down the road, but everybody's doing it now. The big gains have been made. I think it's going to start settling, and now it's up to companies to prove that they've got quality lithium and that they've got ready buyers at the market. A side note on the lithium one, or a caveat if you will, is the fact that manganese was mentioned a couple of times today. Now, I think manganese is very exciting. I know not a lot of people do, but there's been talk about how manganese can replace cobalt in certain types of batteries, in particular nickel, manganese and cobalt batteries. And the reason for this is, look, cobalt, the majority of cobalt that we use around the world comes from the Congo. Now, the cobalt mined there is generally mined in appalling conditions for mostly the people who do it, and also too, it means that the companies who buy cobalt, sourcing it from the Congo, can't meet their increasingly stringent ESG credentials. So there is a push to find cobalt. Now, there was a lot of companies here talking about how they were looking for cobalt and hoping you can find it, but I think the potential applications for magnesium, that's a different metal altogether, manganese, are being overlooked, but I do think there could be some really exciting times ahead for manganese. My third key takeaway for today is rare earths are back in fashion. Now, I'm old enough to remember the first hype cycle for rare earths, and that was over a decade ago when we got all excited and we were going to need these. The prices went through the roof and then they crashed. Well, it seems that every company here has been very keen to talk up their smattering of rare earths. Whether they've been proven or not is a different thing, but the fact that I've heard rare earths mentioned at least a dozen times today through almost every presentation tells me that this is what investors want to hear. We might have to do a separate video on the merits of investing in rare earths, because a lot of the time rare earths need subsidies or government intervention or government loans to make these projects viable. However, I will give you a little bit of a tidbit before I close out today, and that is that what you really want to see with rare earth companies is ones that are moving into the downstream processing. Definitely a separate video in that. Now, I did say I had 3 key takeaways for you today from the New World Metals investment series, but I'm actually going to give you one more, and that is nickel PGE seems to be the word of the day. There seems to be a lot of companies here that are looking for nickel platinum group element deposits with a little touch of copper, with a little touch of cobalt. Now, whether you call them platinum group elements or platinum group metals, doesn't matter. PGEs, PGMs, these 2 acronyms are actually interchangeable, but nickel PGE deposits right now seem to be the ones that a lot of companies are happy to throw some money at looking for. All right, that does finally bring us to the end of today's video. If you like what you saw and you want to see more, make sure you hit like and subscribe. Feel free to drop a comment below and I will look into it for you. All right, that is all I have for you today. I'll see you around the net.